Now, what do you need to look out for 2021? This is a question that I've been asking myself also, and today I'm going to share with you 7 key parts. It's going to cover quite a few parts. It covers China, covers Singapore, covers US. It's going to cover a lot of spectrum of things. And point number 7, in my opinion, a lot of people disagree, so stay tuned for it. Hi guys, welcome back. Now, the first thing that you should take note of is actually Chinese bond defaults. Now, quite a few unit trusts have actually Chinese bond allocations. You'll be surprised. You go and look at the fact sheets, you do realize that some of the short duration, supposed high quality bond funds actually have Chinese exposure. As I'll share with you, state-owned companies which were once thought to be so solid and stuff, quite a few of them have been into trouble, bond default trouble. Names, let me suggest the first one for you. This is China Evergrande, number 2 property developer. This happened in October, and the total bond at risk was $13 billion. That is huge. Don't underestimate it. The second, Huacheng Automotive. The bonds at risk were about $5.1 billion in US dollar. Now, if big companies are in trouble, what about the rest? There's always rumors that Chinese shadow banking is so dangerous and shaky. Nothing has imploded so far, but COVID-19 has changed quite a few things. We don't know what is really rumbling underneath. And for myself, I'll be suggesting to you, look out for Chinese bond defaults. If it spikes up, it could affect sentiment. It could be a black swan event that nobody has expected. Now, the second thing to know is actually, will countries actually jump the gun and reopen despite COVID-19 not being well in control? Take for example USA, my sister's over there. She shared with me that its news are so bad. They've been seeing numbers that are so big, infections, deaths and stuff. Everybody is getting so desensitized by things already. So it's very different from Singapore, where Singapore we're jumping with one community case count. Over there, they're just so tired of things. So actually, countries may start to reopen or start to allow travel faster than expected. I think that could be a possibility to watch out for. Within China, they can do internal tourism. Chinese airlines might still be able to fly. American airlines might be allowed to fly also. So again, my guess is we need to watch out. Countries may be very pressured to open up very quickly in 2021. Simply because of this. Vaccination, while it could be a possibility moving into 2021, implementing it is not so easy. And as we've discovered, one Pfizer dose is approximately US $5. And for emerging market countries, those with big populations, implementing it will cost billions, and maybe to them it's not worth it. You might as well go for herd immunity. So think about it. Will countries really start to open up? If there's a case, travel might still open despite COVID-19. We might react very differently from how we have been doing in 2020. Now, the third thing you need to watch out for is actually Bitcoin. Bitcoin is kind of a taboo subject with me. If you've been following me quite a few times, I've actually mentioned negative things about Bitcoin. I much prefer gold. If you follow, you definitely know about it. But I'm warming up to Bitcoin because there is evidence that in the corporate world there is more movement for it. First example, DBS, they're actually creating a cryptocurrency exchange. Then you see companies such as PayPal, they're buying a lot of Bitcoins, integrating into their system. What about for Square? They are also doing the same thing. So corporates are really adopting cryptocurrency and Bitcoin in particular. And I believe that as more companies start to move in, other companies that are not involved, they feel the pressure to adopt something also. And 2021, they could snowball. This is not an indication of where the price of Bitcoin is going up or down or not. But this is just mainly to share with you, adoption is getting more and more widespread. So for wealthy people, they might be thinking, how can they actually diversify? Because if you're a wealthy person in Argentina, in Venezuela, inflation is crazy over there. Might as well store some money in gold, might as well store some money in cryptocurrency. And that's why adoption rate for Bitcoin might be skyrocketing in 2021. Famous investor, Stanley Druckenmiller, he's also warmed up to Bitcoin. So moving forward, you might see some Bitcoin suggestions on this channel itself. So again, do subscribe if you haven't already subscribed. And again, if this video impacted you positively, smash your like because we're moving on to point number 4. Now, the fourth point to watch is actually, will interest rates continue to stay low in 2021? Now, interest rates affect banking's net interest margins. So banks, they may not like interest rates being low so much, but if you are a borrower, if you own a property and you have some mortgage loan, you definitely do love interest rates to stay low. Now, the next part is, if interest rates continue to stay low, expect in the market there'll be a lot of new products that are with leverage, because if interest rates are so low, leverage actually boosts potential returns. So expect that in the market. And the second part, if interest rates stay low, is you should expect REITs to continue to be going on their buying spree. For example, Suntec REIT, which I've covered in a previous video, Suntec REIT actually bought into UK property. So REITs in Singapore are already expanding Globally, they're doing a lot of M&A. So if interest rates stay low, expect them to be continuously active in buying new assets. Now, point number 5, and this regards the property segment. Now, if you ask property agents, they'll be sharing with you, prices are going up, but watch out on the rental rates. Now, if you look at headlines over here, it sucks to be an expat right now. What about this headline? In Singapore, expats are hit by coronavirus layoffs and they fear for their future. That's a simple fact. At this current moment, companies are incentivized to hire locally. I think that's something that is quite evident. Expats, they are fearful for their fate here in Singapore. A lot of visas are not being renewed, and some of them might decide to use this massive digital change to really go back to your home countries and work from home from there. So there's a lot of major changes. And expats, if you look around, where do they typically stay? They usually stay in better condos. A friend of mine who's in property segment has shared with me there's increasing rates of vacancies in condos in CBD area. One of my favorite condos is actually the sale property. And over here, they could be also seeing more and more vacancies. So look forward to data on the private rental rates. Point number 6 that you should look out for 2021 is actually in US. As we know, Joe Biden, he has been elected already. And if you are not too familiar with US politics, let me give you a quick, simple understanding. Democrats, which is where Joe Biden represents, Democrats prefer handing money to individuals itself, giving stimulus checks to each and everyone. That's why when they negotiate, they're always asking for more checks over there. What about Republicans? Republicans favor helping businesses, opening up instead of giving checks. They don't want socialistic programs. So there's always a conflict of things. And now that a Democrat is a new president, you should expect favor towards that side. More stimulus towards giving checks, more socialistic programs. Of course, Joe Biden has also mentioned that he's not going to do national lockdowns, but we don't know what kind of extent that they'll be changing the US society, how people move around there. Moving forward in 2021, especially when the numbers are so bad. So look out for changes, look out for stimulus in US, look out for whether there's going to be a recession because of a new direction to put health in terms of priority first. So watch out for that. Now this video is sponsored by Skillshare, and if you're looking to upgrade yourself with more skills, look for Skillshare's masterclasses. Now, in particular, if you want to pick up more on video editing, because video editing is so important nowadays, with so much video content going around, look for Jordy's masterclasses. Now within Skillshare, he actually has beginner courses all the way to advanced courses. And unlike his YouTube channel, you realize that there's a lot more structure to how things are being taught to you. So that gives you a very good head start. And as you can see, the reviews are fantastic. To learn more on Skillshare, the first 1,000 to click the link in the description below will get a free trial of the Skillshare Premium membership. If we look at 2020, the few key buzzwords are digitalization as well as disruption, correct? And nowadays there are companies such as SPAC, Special Purpose Acquisition Companies. These are actually shell companies, no business yet, but looking to acquire companies in this high growth space in digitalization as well as disruption. One in particular, Pershing Square Tontine, is so huge, it's few $billion worth, and the manager for it is actually Bill Ackman, a famous hedge fund manager. Now, that suggests to me some froth in the market. Everybody's looking to really invest into this space itself. That's why point number 7 that I'd like you to seriously focus on is, have we reached the end of growth investing? Now nowadays there are so many channels focused on growth investing, looking at technology shares, etc. etc. And let me try to define what do growth investors typically look at. They look at companies with high earnings growth. They don't mind it to be higher volatility. They don't mind it to be higher price in terms of price earnings, because everything is for the future. And growth investing has worked so far. So I'm not saying that it's definitely over. I'm just saying for 2021, you got to watch very carefully whether value investing will catch up or not, because things move in cycles. Nowadays, nobody mentions about Warren Buffett that much. Some even doubt whether he's lost his ability or not, which is amusing. That guy has a fantastic track record across time. So don't ever doubt that. But there seems to be a lack of focus in terms of valuation. Everything is on earnings growth. That's at least how I've been seeing the market. So that's why be very cautious whether have we reached the end of growth investing. Now, if you have stayed to here, and if you believe growth investing still has legs to grow, let me introduce you this previous video I've done. This is on small cap companies, and of course, small cap companies supposedly can exhibit higher growth. This fund has shown a great track record, and it focuses on Asia, which is in terms of valuations much better than in US. So look out for the video, look out for the tutorial. This fund in particular is very interesting. It's also CPF OA approved. With that, I'll sign off. I'll see you in the video. Take care and goodbye.